You're not trading the market, you're trading your mind. And every time you stare at a chart bloated with indicators, news feeds, alerts, and lines that cross like spider webs, you're not gaining clarity. You're losing your edge. Most scalpers don't fail because they lack strategy. They fail because they've never truly learned to see. One candle. That's all it takes. Not 10 indicators. Not a predictive model. Just one candle. Read with presence, patience, and piercing perception. You see, the market is not a puzzle. It's not a machine. It's a living storm, pulsing with fear and greed, rhythm and violence. Most traders bring calculators to hurricanes, and then they wonder why their account evaporates like mist. Welcome to Trading Psychology Stick, where we strip away the noise and find mastery in simplicity. Quick disclaimer, this isn't financial advice, just educational content from years of observing what actually works in the trenches of trading. What you do with these insights is entirely your responsibility. This is a different path, a path not paved with complexity, but with silence, a method that feels more like meditation than math. The candle is not just data, it's language. And if you listen, truly listen, it tells you everything, but only if you remove the noise. Because in the storm of the market, clarity is not a tool, it's a mindset, and your greatest weapon is stillness. In this video, you'll follow the transformation of a scalper who deleted every indicator, ignored every signal, and found mastery in what everyone else overlooks. The story of a single candle. This isn't for everyone. It's only for those willing to look inside before they click. So if you're tired of false hopes and false setups, sit still. Watch closely. The market is about to whisper. Chapter 1. The market is a storm. You're not ready yet. Every trader walks into the market thinking it's a puzzle until they get hit by the storm. They imagine rules, logic, strategies, neatly packaged systems where inputs lead to predictable outputs. But the truth? The market doesn't play by your rules. It doesn't care what your backtest says. It moves with the breath of millions of human emotions. And emotions don't obey charts. Picture this. You wake up at 4:37 a.m. You slept 4 hours, but that doesn't matter. You've got setups to catch. Coffee trembling in hand, you flip open your laptop. 6 charts load. A dozen indicators come to life. RSI, MACD, Bollinger Bands, VWAP, Fibonacci overlays, colored zones. The EUR-USD pair spikes on unexpected CPI news. You freeze. Is this a breakout or a trap? RSI is near overbought, but MACD just crossed up. Bollinger Bands expanding, but news sentiment is mixed. You enter late. Stop loss hits. You grit your teeth. That wasn't supposed to happen. So, you open a second position, double size. This time it works for 2 minutes, then reversal. Another stop hit. By 7 a.m., you're down $2,300. Your hands are shaking, not from caffeine, but from confusion. You stare at your setup. Everything you were taught was here. The signals were clear. But the result? Chaos. Remember January 2025 when Bitcoin Flash crashed $8,000 in 12 minutes? Every indicator screamed oversold. Every system said, buy the dip. But one candle, just one, showed massive distribution volume 30 seconds before the cascade. Those who read that single candle saved their accounts. Those waiting for 3 confirmations got liquidated. Here's the hard truth. You didn't lose because the market was too wild. You lost because you treated the ocean like a board game. Scalping isn't chess, it's surfing. And surfing doesn't reward logic, it rewards rhythm. The market doesn't tell you what it's about to do. It hints, it whispers, it flows. And unless you're tuned into that flow, you're not trading, you're reacting. The reason you lose isn't lack of intelligence. It's sensory overload, too much data, too little clarity. In the end, it's not the market that confuses you. It's your attempt to control the uncontrollable. Here's what no one tells you. Indicators don't save you in a storm. They delay you. The signal you waited for, by the time it prints, the move is done. The market isn't waiting. It never has. You must feel it as it turns, not after. That's why one candle matters. One candle isn't just a pattern. It's a moment of truth. One clean red of price. One honest story told through shape, wick, body, and time. When you simplify, you begin to see. When you see, you begin to trust. And when you trust, you act, not with panic, but with presence. Have you ever sat in front of a chart and felt like the more tools you add, the less confident you become? Like you're drowning in information and starving for insight? If you've experienced this, write drowning in the comments. Maybe it's not about adding more. Maybe it's about subtracting everything that hides what price is really telling you. Because under every messy chart, under every lagging indicator, lies one candle. And one candle is all it takes. But first, you need to see what happens when mindset breaks before the market even moves. Chapter 2. Collapse when mindset fails before the market does. You can have the cleanest chart in the world, the sharpest system, the most disciplined entry rules, but if your mindset crumbles under pressure, none of it matters. Let me tell you what really happens when a trader breaks. Not the sanitized version, the truth. There was a scalper with incredible technical skill. Chart was spotless. Entries were sharp. He understood patterns perfectly. Monday morning, 3 small losses in a row. Total damage, $400. Nothing. Pocket change. But something snapped. He couldn't let the market win. 4th trade, he doubled position size. Lost. 5th trade, tripled it. Lost. By noon, he was down $3,000. But here's where it gets dark. Instead of stopping, he did what broken traders do. He went all in. $25,000 account. Maximum leverage. 1 trade. This is the one, he told himself. Perfect setup. The market moved against him instantly. In 7 minutes, his account went from $25,000 to $3,000. Not a typo. 88% gone. When asked what happened, he said, "I couldn't let the market win." But here's the truth. It wasn't the market he was fighting. It was his ego. I've watched this pattern destroy careers. It starts small, a need to be right, a desire to get even. Then it spirals. Every loss becomes personal. Every red candle, an insult. Every stop trade, a challenge to your intelligence. And once you make it personal, you've already lost. This is what they don't teach in courses. Scalping doesn't just test your strategy. It tests your nervous system. Every candle is a temptation. Every pause is a chance to overthink. Every win inflates you. Every loss deflates you. And if you're not grounded, you get swept away. The market becomes a mirror, amplifying whatever emotion you bring into it. Here's what saved me from the same fate. After a devastating loss early in my journey, I realized something. Losing is not failure. Reacting poorly to loss is. Think about that. One candle traders accept stop losses like samurai, accept scratches in battle, with honor, with neutrality, with curiosity. Every loss becomes information, not insult. The goal isn't to win every trade, it's to stay centered through every outcome. Try this tomorrow. After each trade, write 3 things. What happened objectively, what you felt emotionally, what you learned practically. Do this for 1 week and watch how your awareness transforms. The collapse always follows the same pattern. First, you lose money. Then you lose discipline. Then you lose perspective. Finally, you lose everything. But it doesn't have to be this way, because the antidote to chaos isn't more control, it's less. Have you ever found yourself entering a trade just to make back what you lost? Have you ever increased size on the next trade, even though nothing changed in the setup, just in your ego? If this hits home, type ego is expensive below. So, now you know what happens when complexity meets emotion, total destruction. But what if there was another way? What if the solution was so simple, it's been in front of you all along? Chapter 3. 1 candle, 1 truth, the minimalist breakthrough. What if everything you've been chasing, clarity, timing, precision, has been buried under the noise you created? What if the signal was never missing, only masked by the very tools meant to reveal it? After witnessing that collapse, after seeing how complexity amplifies emotion, let me show you the opposite path. 1 candle, that's it. That's the whole strategy. Not as a pattern, but as a mindset. Because within a single candle lies more information than most traders process in an hour. The open and close tell you who won. The wick tells you who fought. The body tells you how strong they were. And the location, that reveals everything about where the battle happened. When I first encountered this approach, I dismissed it. You can't trade with just 1 candle, I thought. That's too simple. I had multiple monitors, dozens of overlays, and constant information flow. I was informed, but I wasn't profitable. My trades felt like guesswork wrapped in statistics. Then I observed a senior trader during the Asia session. His chart had no indicators, just price, 1-minute time frame. He'd watch for extended periods, then place 1 trade. Enter on the close of a small bullish candle near a support zone. Exit after 5 pips. No hesitation, no fear, and his consistency was remarkable. When asked about his method, he said simply, "Price speaks clearly if you quiet everything else." That statement haunted me. The market does speak, but most traders are too loud inside to hear it. You don't need to predict 10 candles ahead. You just need to understand the one in front of you. One candle shows you the power balance. It shows you intent. And if you pair that with patience, you can start entering not because the system says so, but because the market has invited you in. Here's what a candle reveals when you look deeply. A large bullish candle with little to no wick at the top. Buyers dominated from open to close. They didn't just win, they crushed. But put that same candle at the top of a long trend with low volume. That's exhaustion, disguised as momentum. Now flip it. A hammer with a long wick below and tiny body at support. That's buyers absorbing selling pressure, a rejection, a shift. It's not just about shape, it's about context. Candle plus location plus volume equals narrative. Try this exercise right now. After this chapter, open any chart, pick any time frame, find one candle that stands out, not because of its size, but because of its story. Where did it form? What came before? What followed? Write down what you think it meant. During the March 2025 bank crisis, while everyone watched news feeds and indicators, one candle on SPY told the whole story. A massive bearish engulfing at the open, with volume exceeding the previous 5 days combined. That wasn't selling. That was institutional evacuation. One candle, 15 seconds to form. Those who read it saved their portfolios. And that's the key. The candle isn't a signal, it's a sentence. Each wick, a whisper, each close, a declaration. But most traders read candles the way students skim poetry, searching for answers instead of meaning. You can't trade the candle if you don't feel what it's saying. That's why this method works. It simplifies everything down to a story. No filters, no lags, just raw price speaking to you. But here's what nobody expects. To truly read one candle, to feel its message, you can't be rushing. You can't be desperate. You can't be seeking revenge on the market. You need something most traders never develop. You need stillness. Chapter 4. Zen before the click. Ritual over reaction. This is where most traders tune out. I came for strategy, not philosophy, they think. Those are the ones who stay mediocre, because what I'm about to share is the edge nobody talks about. The edge that has nothing to do with charts and everything to do with the state you bring to them. Speed is seductive. In the world of scalping, everything tells you to go faster. Blink and the setup is gone. Hesitate and your edge evaporates. But here's the paradox. The fastest traders aren't the ones who rush. They're the ones who are still inside, even while the market moves. They act from calm, not chaos. They move from ritual, not reaction. I once observed a professional trader who had an unusual pre-market routine. Every morning, he would sit still for 10 minutes. No phone, no chart, eyes closed, hands resting, just breath. Then he'd light a stick of incense, not for mysticism, but to mark a boundary, a signal to himself. This isn't ordinary time. This is sacred time. Trading was his dojo, his terminal, a sword, his mouse, the hilt, and every click had to come from stillness. If I'm rushing, he explained, I don't trade, because a rushing mind is already in loss. At first I thought this was nonsense. Markets move fast. You need to move faster, right? Wrong, dead wrong. That trader's returns, consistent 2 to 3% daily. While I was sweating over 8 screens, he was breathing through one. While I took 50 trades, he took 5, and he won. Take 30 seconds right now. Close your eyes, take 4 deep breaths. In for 4 counts, hold for 4, out for 4. Feel the difference? That's the state you need before every trade. Not excited, not anxious, present. The one candle mindset isn't just a method. It's a mirror. It reflects back the state of your nervous system. If you're chaotic, your reads will be blurry. If you're desperate, you'll force trades. But if you're calm, if you treat each moment like a ritual, you'll start to see what others miss. You'll notice a hesitation in a wick, a thinning of volume, a shift in pressure. You'll become sensitive, tuned in, and that's when your edge becomes art. Ritual isn't superstition. It's structure for the soul. Maybe for you, it's writing down your intention before each session, or setting a 20-minute timer where you only observe, not act. Maybe it's a breathing pattern before each entry. The point isn't the tool, the point is the pause. Because between stimulus and response, there's a gap. And in that gap, mastery lives. Have you ever entered a trade just to silence the discomfort of not being in? Have you ever clicked not because the setup was perfect, but because your mind was restless? What if, instead, you waited? What if you trained your body to breathe before you act? This changes everything. Because when you combine the clarity of one candle with the stillness of Zen presence, you stop chasing the market. The market comes to you. And that's when you realize complexity wasn't protecting you. It was hiding your weakness. Chapter 5. Complexity is your enemy, not the market. Now that you've felt stillness, now that you understand the power of simplicity, let me show you why everything else is a trap. Complexity feels intelligent until it starts making you stupid. It begins innocently. You watch a few YouTube videos. You hear traders swear by their setups. This EMA is magic. This RSI divergence never fails. Just wait for 3 confirmations. So, you add an indicator, then another, then another. Soon your screen looks like a cockpit. It feels productive, like you're being a serious trader. But then something strange happens. You start hesitating. Conflicting signals show up. RSI says oversold. MACD says wait. Fibonacci says enter now. You freeze, unsure which voice to trust. So, you wait. You miss the move. You chase, you lose, and you blame yourself. But here's what really happened. You didn't lose because you lacked information. You lost because you had too much. Every indicator you add creates another voice in your head, another opinion, another delay. And in scalping, delay is death. Let me share a real observation from the trading floors. There was a quantitative analyst who spent 6 months building what he called the perfect system. RSI, MACD, OBV, order flow, heat maps, custom volatility scripts, all integrated. It looked like NASA mission control. The result? His win rate dropped from 55% to 23% in 3 months. Why? Because he didn't trade the chart anymore. He traded the tools. Every signal came with a contradiction. Every alert came too late. Think about the February 2025 FOMC meeting. Markets were expecting a pause. Every analyst, every model, every indicator pointed to stability. But 15 minutes before the announcement, one single candle on the ES futures showed unusual selling pressure. Not the indicators, not the news. Just one candle with heavy volume and a long upper wick. Those who trusted that candle were already short when Powell surprised everyone. The drop was 80 points in 10 minutes. Pause this video for 10 seconds. Look at your current trading setup. Count how many indicators you have open. If it's more than 3, you might be suffering from the same disease. Here's the truth. Complexity creates distance. Every layer you add between yourself and price delays your instinct. It muffles the signal. Complex systems are seductive because they let you hide. You don't have to take responsibility. You can blame the tools. But the market doesn't pay you to be clever. It pays you to be clear. Remember the trader who collapsed in Chapter 2. He had 17 indicators running, 17 voices telling him different things. When his mind cracked, it wasn't just from loss. It was from confusion, from trying to reconcile impossible contradictions. The complexity didn't protect him. It amplified his destruction. So, what if you stopped adding tools? What if, instead, you stripped your chart naked and dared to see price as it is? As just one candle, raw, unfiltered, uncluttered. It might terrify you, or it might finally set you free. And once you're free from complexity, once you've embraced stillness, you're ready for the first secret, the one hidden in plain sight, the one most traders ignore because it seems too small to matter. Chapter 6. Reading the Wick, Market Sentiment Hidden in Shadows. Most traders obsess over the body of a candle, how thick, how long, how green or red. But if you want to understand sentiment, you don't look at the body. You look at the shadows, the wicks, the thin lines traders ignore. Because while the body tells you who won the round, the wick tells you who fought and how hard. And sometimes the one who lost tells the more important story. Imagine this. It's the London Open. Volatility kicks in. A candle forms with a long upper wick, small body at the bottom. Novice traders cheer. It went up. Look at that height. But a seasoned reader shakes his head. No, it tried to go up, and it got slapped down. That wick isn't just a line. It's a rejection. It's the collective hand of sellers pushing back against buyer ambition. A wick is unfinished business, a remnant of intent that didn't survive. Let's go deeper. Picture a shooting star, small body at the bottom, long upper wick. Alone, it's just a shape. But at the top of a 3-day rally, with volume drying up, that's exhaustion. That's smart money exiting quietly. That's a trap being set. Or take a hammer candle, long lower wick, body near the top. Place that on a support zone after a downtrend, and it becomes a question. Did sellers just run out of fuel? And the answer, very often, is yes. During the March 2025 tech sell-off, NASDAQ futures showed something fascinating. Every bounce attempt created longer upper wicks. Not just one or two, but 7 consecutive candles with rejection wicks. Each wick got longer, while bodies got smaller. It was like watching a boxer getting weaker with each swing. Those who read the wicks were already short before the 400-point collapse. Here's a secret most educators won't tell you. Wicks lie at extremes. A massive wick during low volume, often just a stop hunt. A small wick during high volume, that's real rejection. You must read wicks in context, never in isolation. Volume plus location plus wick equals truth. The psychology is simple but powerful. A wick is proof of rejection. It's the ghost of a failed attempt. Reading the wick is reading that struggle, noticing when strength becomes weakness, when overconfidence meets resistance. But most traders miss it. They zoom out, they lump candles together. They look for patterns but not for pain. And that's what wicks really show, pain points. A wick isn't just a line, it's a fingerprint of emotion burned into the chart. Have you ever ignored a long wick only to get stopped out moments later? Comment wicks don't lie if you've learned this lesson the hard way. So here's your challenge. Stop ignoring the shadows. Zoom in. Read them like confessions. Let each wick guide you not just where the price is, but how it feels. Because trading isn't just logical, it's emotional, and the wick, that's where the emotion leaks out. But reading wicks is only half the story. Because a wick without volume is like a scream in a vacuum. Nobody hears it. Nobody cares. Chapter 7. Volume, the breath of conviction. Price shows movement, but volume shows meaning. Because behind every candle, behind every tick, lies a question. Did they really mean it? And the only way to know is to listen to the breath of the market, its volume. Without volume, a breakout is a whisper. With it, a breakout becomes a scream. After learning to read wicks, volume becomes your validation. The two together, unstoppable. Let's return to a common scene. You see a strong bullish candle pushing above resistance. It looks perfect. Clean body, no upper wick. You want to click, but something feels off. You check the volume bar. It's the lowest in the last 10 candles. What does that tell you? That this move might be nothing more than shadow boxing. A push by a few, not a flood by many. The market isn't behind it. It's not conviction, it's theater. Now imagine the same candle, but this time, volume is surging. It's the highest of the session. That's not a hope, it's a decision. The market has voted with money, and in this world, money is the only vote that counts. During the June 2025 gold rally, something peculiar happened. Price broke above $2,100 with a massive green candle. Breakout traders piled in. But volume was half of the previous day's average. Within an hour, price reversed violently. Those who checked volume stayed out. Those who trusted price alone got trapped. Here's how to read volume like a professional. Volume spike with tiny candle body, that's a battle. Someone's fighting hard. Volume spike with large body, that's conviction. One side dominated. Volume dying while price rises, that's exhaustion. The move is ending. Volume surging while price falls, that's capitulation. The bottom is near. But here's the advanced read. Compare volume to recent averages, not absolute numbers. A high volume bar in the Asian session might be low for London. Context matters. Time matters. Participants matter. Volume tells you the truth. When price drops fast but volume drops faster, it's not selling, it's drifting. When price spikes but volume flatlines, it's a trap, not a trend. But when a small candle forms with huge volume, that's a battle. And the candle itself tells you who won. This is how you read a candle with volume, not separately, but together, like breath to movement, like drum to dance. Have you ever taken a breakout trade that immediately reversed? Ask yourself, did volume confirm it? From now on, treat volume like breath. No breath, no life. Let your trades be supported by conviction, not just shape. Now you understand the Trinity, The candle tells the story, the wick shows the struggle, the volume proves the conviction. But knowing isn't enough. You need protection. Because even the best readers get the story wrong sometimes. Chapter 8. Risk the noble stop loss. Most traders treat stop losses like shame, a failure, a scarlet letter on the chart. They move them, hide them, cancel them, pray they don't hit. But after seeing collapse, after understanding simplicity, let me reframe everything about risk. In the one candle mindset, a stop loss isn't an exit, it's a boundary. A line drawn with dignity, a declaration, this is where I'm wrong, and I honor that. Risk isn't weakness, it's wisdom, because only fools trade without it, and only masters surrender to it willingly. Let's be brutally honest. Remember the trader from Chapter 2 who lost 88%? His biggest mistake wasn't the bad trade. It was removing his stop loss. Just this once, he thought. That's the last thought before destruction. Every stop loss you place is a sign of self-respect. It's you saying, I trust my red, but I trust the market more. You don't control what price does, but you control what you tolerate. The stop is not a punishment. It's a permission slip to stay in the game. Every time you hit a planned stop, you haven't failed. You've succeeded at risk management. And risk management is the bedrock of trading longevity. Take the one candle system. Your stop is clean. It's precise. Just beyond the wick. If your candle setup is valid, price shouldn't go there. If it does, you're out. No emotion, no debate, no moving the line. Because moving your stop isn't strategy, it's fear in disguise, and fear never pays. I remember observing a trader's breakthrough moment. Not her first big winner, but the first time she hit 5 stop losses in a row and smiled. Why? Because every one of those losses was within plan. She reviewed them and realized none were mistakes, just part of the game. And a month later, she had her best performance ever. Not because her edge changed, but because her mindset finally aligned with it. Here's the math that saves accounts. Risk 1% per trade. Always. If you have $10,000, risk $100. Not $500, not $1,000, $100. But that's too small. No. Small losses let you survive long enough to find your edge. Large losses ensure you never will. Your job as a scalper isn't to avoid losses. It's to make sure every loss is small, intentional, and never personal. When you accept that, you release the emotional charge. You stop chasing revenge. You stop doubling down. You start seeing the market not as an opponent, but as a mirror. Have you ever removed a stop loss because you were sure it would bounce? If this resonates, type stop loss is sacred below. Let's commit to this discipline together. So here's your new belief. Every stop loss hit is a lesson paid. Every dollar lost within plan is tuition in the market dojo. The more you embrace it, the less power it has over you. Because when your downside is defined, your confidence expands. You now have the protection. You have the philosophy. You have the tools. Time to put them together into a system so clean, so simple, that execution becomes automatic. Chapter 9. One Candle System. Rules without rigidness. By now you've seen the pieces, the candle, the wick, the volume, the context, the risk. But knowledge without structure is just noise. You need something to hold it all together, something simple enough to execute under pressure, yet dynamic enough to adapt. That's where the one candle system comes in. It isn't a mechanical checklist. It's a fluid frame, a way of seeing, feeling, and acting that's both minimalist and lethal. Here's the core. You wait for a single candle that speaks with clarity, not perfection, clarity. It must appear at a meaningful level, support, resistance, VWAP, supply, or demand zone. It must show intent through its shape, through its wick, through its close, and it must come alive with volume. When those three align, price, pattern, pressure, you prepare. Your entry is on the close of that candle, or on a slight retrace. Your stop is just beyond the wick. Your target is a clean risk-reward, multiple, 2R, 3R, depending on structure. Simple, surgical. No waiting for 3 more indicators. No double confirmation from a bot. Just one candle, but one that earns your trust. Let's walk through it. You're watching BTC USD on the 1-minute chart. It's been grinding into a support zone all morning. Volume is light. Suddenly, a flush. Price drops below the level, then snaps back inside. A long lower wick forms. The body closes strong and green, right above the zone. Volume surges. That's your candle. The story? liquidity grab, weak hands flushed. Buyers step in, you enter on the close, stop just below the wick. Your target? A retest of VWAP or previous high. The result? 3R in under 10 minutes. But wait, what if the candle fails? What if you're wrong? That's why you have the stop. Small loss, move on, next setup. No revenge, no doubling, just the next clean read. The system scales. Same structure applies on the 5-minute, 15-minute, even hourly chart. What changes is your patience. What remains is your lens. But here's the key. You must trust what you see. No second guessing, no waiting for permission. The market already spoke through that candle. Your job is to listen and act. Pause here and think about your last losing trade. Could you have avoided it by waiting for clearer confluence, for stronger volume, for a better location? Write patience in the comments if you realize you've been forcing trades. This approach frees you from the need to be perfect, because the one candle system is not about prediction, it's about readiness. It doesn't guess where price will go. It listens to where price just declared its intent and responds. That's a massive shift, from control to collaboration. That's what this system gives you, freedom from paralysis, confidence from clarity. But systems are still external, patterns are still outside of you. What happens when you've learned to see them all? When every candle speaks clearly? When reading becomes second nature? Chapter 10. Candle Patterns. As archetypes, entry with intuition. Most traders memorize candle patterns like flashcards, hammer, doji, engulfing, shooting star. They study them in isolation, hoping that one shape alone will unlock consistent entries. But after everything you've learned, you're ready for a deeper truth. Patterns are not codes, they're characters. And just like in stories, their meaning depends on where they appear, when they arrive, and what came before. Candle patterns are archetypes, not formulas. They represent moods, intentions, turning points. And if you read them like living beings instead of static shapes, you start to sense the story unfolding in real time. Let's break the illusion. A hammer is not just a bullish signal. It's the image of a market that fell and then fought back. Sellers pushed price down hard. Buyers stepped in with force. The long lower wick, a rejection of fear. The small body, a quiet reclaiming of control. That candle doesn't scream. It whispers, "We're still here." Now, take that same hammer and put it at the bottom of a 3-day bleed on rising volume near a major support zone. It's no longer a shape, it's a declaration. A line drawn in the sand. Every pattern has this dual nature. A doji, it's not indecision, it's tension. A pause before war. A tug of war between buyers and sellers, neither willing to yield. It's the eye of the storm, the inhale before the scream. But only if it appears in the right place, at the top of an exhausted run, or the bottom of an uncertain drop. Out of context, it's noise. In context, it's prophecy. Remember the April 2025 oil shock? When news broke about supply disruptions, crude futures went vertical. But at the exact peak, a perfect shooting star formed on the 5-minute chart. Not just any shooting star, but one with volume 3 times the average. That wasn't just resistance. That was institutions distributing into retail euphoria. The reversal was swift and merciless, down $4 in 20 minutes. There's a way of seeing candles that goes beyond memorization. Think of them as emotional snapshots. That's a proud candle, you might observe. Or, this one is wounded. This isn't poetry, it's precision, because each candle is a moment in crowd psychology. A bullish engulfing during news hour, aggression, that same pattern on Friday afternoon, possibly a trap. You must feel the intention behind the form. Here's your evolution path. First, you memorize shapes. Then, you understand context. Finally, you feel intention. When you reach that third level, patterns stop being signals and start being conversations. The market speaks. You respond. No delay, no doubt. Just flow. So here's the new frame. Don't just memorize candles. Befriend them. Know their personalities. Know when they're strong, when they're faking, when they're tired. Treat them not like symbols, but like actors on a stage. Because once you can see their roles, you'll know how the scene might unfold. But even the best actor needs the right stage. And that's where confluence comes in. Chapter 11. Confluence, when one candle meets structure. A single candle can whisper intent. But when it speaks in harmony with the environment around it, it stops whispering and begins to roar. After mastering individual elements, you're ready for the multiplier effect. That's the power of confluence. It's the moment when structure and sentiment align, when price, time, volume, and pattern all nod in the same direction. And in those rare moments, your edge sharpens. The market becomes less random. The entry feels inevitable. Let's define it clearly. Confluence isn't about stacking signals until you're overwhelmed. Remember, complexity is your enemy. Confluence is about recognizing when multiple truths point to the same conclusion. A bullish engulfing candle on its own? Interesting. But when it appears at a clean support level, right after a long downtrend, with increasing volume, near a Fibonacci retracement zone, now it becomes compelling. Now it's not just a pattern, it's a message written in bold. During the May 2025 NASDAQ correction, everyone was calling the bottom too early, but patient traders waited for true confluence. When price finally hit the 200-day moving average, formed a hammer candle with massive volume, right at the 61.8% Fibonacci retracement during the first hour of New York session, that was confluence. Not hope, evidence. The bounce was explosive, over 200 points in 2 days. But here's what separates professionals from amateurs. They don't wait for perfect confluence. They wait for sufficient confluence. 2 strong factors can outweigh 5 weak ones. Quality over quantity, always. Here's a practical test. Next time you spot a potential setup, ask these 3 questions. Where is the candle forming in relation to key structure? What is volume telling me about conviction? What time of day is it, and who's actively trading? If at least 2 align strongly, you have confluence. If all 3 agree, you have a gift. But confluence is also subtle. Too much of it, and you fall back into paralysis. You wait for the perfect setup, one that never comes. So here's the truth. Confluence is not about stacking, it's about resonance. Does what you see feel true across dimensions? Is the story consistent? Or are the elements in conflict? Comment context matters if you've ever ignored confluence and paid the price. The more you train this confluence eye, the more your trades feel effortless. Not because they're easy, but because they make sense. They fit. They click. And when they click, you don't need courage. You have clarity. Now you have almost everything. The philosophy, the method, the protection, the patterns, the confluence. But there's one final temptation. One last trap that catches even experienced traders. Chapter 12. Indicator as whisper when simplicity needs a guide. You've stripped away the clutter. You've learned to read the candle, feel the wick, hear the breath of volume. You've embraced stillness, mastered risk, found confluence. But now the temptation creeps back in, soft, subtle, seductive. Just one more tool, you think. Just one more confirmation. And suddenly, your chart starts filling again. After coming this far, don't fall back into the trap. Here's the key. Indicators are not evil. They're not forbidden. But in the one candle mindset, they are never the leader. They're the whisper, not the voice. When you place an EMA or an RSI on your chart, it's not to tell you what to do. It's to gently reinforce what you already sense. If you need an indicator to convince you a candle is strong, you don't trust the candle. And if you don't trust the candle, you're not trading one candle anymore. You're trading fear. Let's talk tools. If you must use something, keep it minimal. A single moving average like the 20 EMA can help define the trend or dynamic support. VWAP is another favorite. It shows where volume-weighted price wants to center. RSI, use it to spot divergences, not overbought or oversold noise. But always read the candle first. Candle is context. Indicator is echo. I've watched brilliant traders destroy their edge with over-optimization. They build indicator stacks so complex they look like circuit boards. They want precision. What they get is paralysis. The solution is always the same. Remove everything. Trade raw for 2 weeks. The response is universal. I finally saw the market breathe again. Here's a practical rule. 1 indicator maximum. Choose wisely. Use sparingly. Trust rarely. Because the moment you need the indicator more than the candle, you've already lost the edge we've been building. So ask yourself, do your indicators add clarity or control? Are they confirming what you already see or replacing what you refuse to feel? The one candle. Mindset thrives on presence, on being here now. If an indicator enhances that, use it. If it distracts from it, delete it. So here's your rule going forward. Start with the candle. Ask what it's saying. Then, and only then, peek at your indicator. If it agrees, fine. If not, trust the price. Because the price is the truth. Everything else is commentary. You're almost complete. You have the system. You have the discipline. You have the safeguards. But knowledge without practice is philosophy. And philosophy doesn't pay bills. Chapter 13, Simulation. Dojo, backtest like a monk. You don't become a samurai by reading about swords. You become one by stepping onto the tatami and repeating the same motion 10,000 times. Trading is no different. You can study all the candle theory, master every pattern, understand risk down to the decimal, but until you see it move again and again, under pressure, under time, under chaos, it's still abstract. Simulation is where instinct is forged. It's the dojo where repetition sculpts reaction into art. Backtesting is not just about statistics. It's about sharpening your eye. It's about tuning your nervous system to rhythm. When you watch 100 candles form in a row, without pausing, without skipping, you begin to see patterns inside patterns. You feel the ebb and flow of the market. You start to anticipate, not with logic, but with presence. Start simple. Open TradingView. Choose a market, EURUSD, BTC, gold. Pick a day. One time frame, 1 minute or 5 minute. Use the bar replay tool. Go candle by candle. Watch how price moves near your key levels. Observe how wicks form under pressure. Notice how volume changes when structure breaks. Don't skip. Don't fast forward. Watch it unfold like a live performance. Your role? Not to judge, just to witness. Here's your assignment. This weekend, replay last Friday's session on your favorite pair. Watch every candle from market open to close. Mark every one candle setup you see. Then check what actually happened. But here's the advanced practice. Don't just mark setups. Feel them. When you see that perfect hammer at support with volume, pause, breathe. Ask yourself, would I click here? Feel the resistance in your body. Feel the doubt. Feel the clarity. This is training not just your eye, but your entire system. Professional traders often log hundreds of backtested sessions, not to build a model, but to build themselves. They don't track only win or loss. They track emotion, tension, breath. The candles were secondary, one explained. The real game was learning how to stay still while they moved. You want to develop feel? Replay 30 candles a day, every day. Mark the setups that align with one candle logic, then pause. Ask, would I take this trade live? If not, why? If yes, where's the entry, the stop, the exit? Keep a log. Not for ego, but for refinement. Backtesting creates familiarity, and familiarity breeds confidence, not arrogance. Quiet confidence, the kind that clicks the mouse not with hope, but with readiness. But training alone can be lonely. The dojo can echo. That's why the next lesson is about finding your circle, the silent few who also walk this path. Chapter 14, Community, the quiet circle of candle readers. Trading is solitary. You sit alone, you think alone, you win alone, you lose, brutally, alone. But mastery doesn't happen in isolation. It happens in communion, in circles, in mirrors, with others who walk the same edge and bleed the same doubts. After all this inner work, after stripping away the noise and finding the signal, you need witnesses, not for validation, for evolution. Community doesn't make the market easier, but it makes the silence less cruel. The truth is, most traders never evolve because they never reflect. And most never reflect because there's no one to reflect with. That's why a true trading community, one rooted not in signal chasing, not in flexing profits, but in deep awareness, is rare and precious. Enter the one candle circle, a place where charts are shared without ego, where losses are dissected with humility, where setups are less important than state. You'll see a trader post a beautiful engulfing candle that failed, and others will comment, not with mockery, but insight. Check the volume, it dried up. Or, that was inside Asia session, liquidity trap. These conversations sharpen the blade, not by arguing, but by listening, quietly, intentionally. It's in this space that growth accelerates. You take what you're learning and externalize it. You hear how others interpret the same candle differently, and suddenly your view expands. You see flaws in your assumptions. You catch blind spots in your system. You learn faster, not because you're being taught, but because you're being mirrored. From years of observing trading communities, the most transformative moments come from vulnerability. When someone shares not just their wins, but their process, their struggles, their breakthroughs. One trader posted his 30-day challenge, one candle entry, one trade per session, strict journaling. He shared every loss, every chart, every note. His account grew only 6%, but his awareness exploded. It wasn't about P&L, he wrote. It was about control. I finally trust myself now. So here's your invitation. Build your dojo. Find or create a space where one-candle traders gather. Share your process, not just your wins. Reflect together, fail together, refine together, run challenges, replay charts as a group. Hold each other accountable, not to results, but to presence. Take the one-candle challenge. 30 days, one high-conviction candle entry per day. Fully journaled, no indicator crutches. Post your charts. Post your mindset. Post your lessons. You will be shocked by how quickly your intuition sharpens when it's witnessed. Because at the end of the day, you can't see your own blind spots, but others can. And if they care enough to show you, gently, honestly, you grow. Fast. But there's one final chapter left. The integration. The turning inward. Because now that you've walked the system, the psychology, the ritual, the rhythm, it's time to step fully into mastery, not just as a trader, but as a presence. Chapter 15. Enlightened scalping, trading as a form of presence. At some point, strategy fades, charts disappear, the thrill of profit loses its shine. What remains is presence. Not just being in the market, but being with it, fully, attuned, quiet. After everything, after the collapse that showed you what not to do, after the simplicity that showed you what to do, after the stillness that showed you how to be, you arrive here. In this space, trading becomes more than entry and exit. It becomes a meditation, a reflection, a practice of clarity in the face of chaos, a ritual of noticing, not predicting, acting, not reacting. This is enlightened scalping, where you don't trade to win, you trade to witness. And in that witnessing, something shifts. The candle is no longer data, it's a dance. The wick is no longer noise, it's a breath. The loss is no longer shame, it's tuition. Every click becomes sacred, every moment a mirror. You don't force trades anymore. You wait for the candle that calls you. You don't chase price. You listen to it. You don't fear red days. You honor them. You don't need to know what happens next. You're simply here, trading what is. I once met a veteran trader, 73 years old. Didn't talk much. Traded one pair, one session, one candle per day. His P&L was modest, but his peace, immaculate. He said, "I don't trade to make money. I trade to return to myself." At first this seemed like philosophical nonsense, but now I understand. His screen was his shrine, the chart, his monk's bell, the trade, a bow. He wasn't chasing alpha, he was maintaining alignment. Think about it. Every trade is a decision. Every decision reveals who you are. Desperate, you'll chase. Fearful, you'll hesitate. Angry, you'll revenge trade. But present, you'll flow. The market becomes your teacher, not about entries, about you. That's what this journey is about. You started in the storm, overwhelmed, scattered, hunting control and complexity. But now you've stripped it all back. You've learned to see again. One candle, one breath, one presence. That is enough. You've built your system. You've met your fear. You've trained your eye. You've honored your stops. You've found your circle. You've learned when to act and when to wait. What else is there? Only this. Repeat. Not out of obsession, out of devotion. Because mastery is not reaching the end. It's walking the path so many times, it disappears beneath your feet. You become the method. You move with the chart like wind over water. Nothing forced, nothing withheld. And somehow, you profit, not because you chased it, but because you stopped needing it. Have you ever felt that moment, where time disappeared, the noise fell away, and you were simply there, watching a candle form, and you just knew what to do? That's not magic. That's alignment. That's you, unblocked. So now, close your eyes. Imagine this. It's your final trading day. Your screen lights up one last time. One chart, one level, one candle forms. It breathes, it moves, it calls. Would you click? Would you trust? Would you smile, win or lose, knowing that every trade was a step toward presence? Because that's the truth behind enlightened scalping. You're not here to beat the market. You're here to meet yourself. And with that, the journey begins. You've made it. Through 15 chapters, through chaos and clarity, through wicks and whispers, through your own doubt and the edges of your intuition. And if you've come this far, it means something inside you has already shifted. You no longer see trading as a game of signals. You see it as a mirror, a dojo, a meditation. You no longer believe you need more. You realize you simply need to listen better. So, now let's pull the thread tight. You've learned that complexity is the enemy of presence. That one candle, read well, reveals more than a dozen indicators. That volume is breath, structure is rhythm, and context is truth. That risk is not loss, it's liberation. That mindset breaks before systems do. That mastery hides in repetition. And community accelerates awareness. And that peace doesn't come after profit, it comes before it. Now, the invitation is simple. Practice. Run the one candle challenge. 30 days. One chart. One time frame. One trade per session. One candle-based entry. Strict stop. Clear target. Journaling after every click. No distractions. No indicators unless necessary. No chasing. No forcing. Just showing up. Listening. Acting only when the market speaks clearly. And if this journey has stirred something in you, if you've ever entered a trade that felt like poetry or felt the market shift inside your chest before it moved on screen, then you're already halfway there. So comment below, I'm ready. Let others know you've chosen this path. Let others see you walk it. And find your circle among those who also choose stillness over noise. Because the market will always rage, but clarity belongs to the quiet. Remember, you don't need more tools. You don't need more speed. You just need one candle. One moment, one deep breath before the click. That's where mastery begins.